Hi guys, my name is Abdur. I run the TaxAssist Accountants office in Croydon. We service clients from limited companies, sole traders, to landlords and clients requiring tax advice. Today I'm going to go over a quick video on things you should consider when starting your own business.
So, the things that you should consider when starting your own business are create a business plan. It sounds very obvious, but a lot of people don't do it. I'm going to go over what sort of stuff you should be writing in a business plan, and then we're going to go over some accounting and reporting as to what accounting system you should use, and then tax and VAT. This is all towards the UK businesses, and then all of it is kind of like in the business and sole traders and businesses operating in the UK. But the rest of it should apply to everyone. So why you need a business plan? Well, the first thing is that if you don't plan, you're failing to plan is planning to fail. So that's very obvious. A business plan basically should have what you're going to do, what sort of stuff you are good at, what are your weaknesses, and what are these opportunities and strengths. So you would have seen the SWOT analysis. So it kind of gives you a sense check of it. It gives you an idea. It gives you a chance to develop your idea. And then in the business plan, you need to also incorporate your cash flow forecast as to if you're going to be getting like a new equipment. For example, you are an Amazon trader, for example, you sell online on Amazon, you need a new computer, you need a new franking machine. How are you going to get that? Because that would be a cost. If you're, for example, a restaurant, you need to hire another chef. How are you going to fund it? And same thing for the premises. If you're a high street restaurant, jeweler, second-hand goods seller, you need an office and a shop, and you need to incorporate that in your business plan as to how you're going to get the money, because you will not start making money instantly. It takes time. In a business plan, you need to be clear on your financials as to when the cash flow, when do you expect them to receive money, like the sales to start coming in, and because you're going to have a lot of outflow, so you need to have a very good cash flow forecast so you can plan for any funding requirements. So like, for example, in month 3, you need to hire a staff member. How are you going to fund it? So you probably need to look at funding requirements. And it's the business plan is very important as well. If you go for the lenders, they will need to see what your sort of business you're doing. It kind of shows that you're serious about it. So what to write in a business plan? Just take a piece of paper and start writing what you're going to do on it, how the market operates, where are you going to operate, how are the competitors doing. So best advice I give my clients is that before you get a shop, you need to walk on the streets, understand what the people are doing. So I had a client the other day, and she wanted to open a restaurant. And so I told her that she needs to walk on the roads. She's thinking about opening a restaurant, observe what the consumers are doing over there. So that's kind of your market research you need to do. And you need to see how you're going to sell the product. What are the competitors selling it for? For example, just being a fictitious customer, calling your competitors up, asking for their advice, for their market prices and stuff. So that's how your market research should be. And in the market research and this business plan that you make, you need to put in place your marketing plan as well as to how you're going to market your business. What are the areas you're going to be working on? Is it going to be Google, Facebook, leaflets, whatever it is? And then you need to incorporate the marketing budget into your business plan as well. So in your cash flows as well. So it's kind of good for you to have a business plan. It doesn't have to be a fancy one. You can just make one on a piece of paper. So it gives you an idea of what sort of business viability is this. Is there any business viability in what you're trying to start up? Because it's easy to say, I'm going to just go in and test the market, but you're probably going to lose money and you're going to be wasting your time. So it's good to plan ahead. So if for the accounting and reporting, all businesses need to have their record of their transactions, and it's a statutory requirement, and it kind of helps you with the performance of the business as well. So over time, you can see how good you were doing in each month or each day, for example, or you can see what are the busy times as well. So, well, not all accounting softwares can do it, but some can. And it gives you, and you can do a budget as well in it. So it's good for you to have accounting software. You know who owes you money, who you owe, and for the tax and VAT records, you need to have one. When you get an accounting software, for example, just make sure it's simple to use. It's the one that you understand or your friends understand, or the accountant you're going with knows what they're doing. Just look for a cloud accounting, so you can use it on your computer, you can use it on your phone, on your tablet, anywhere. You don't need old softwares anymore. So this area is mostly for the UK businesses. But I'm going to go through it anyway. So personal tax we pay is on the income tax, and then we pay national insurance as well. And if you're self-employed or a director, you need to do a tax return. Companies pay corporation tax. It's currently at 19%, but it's changing to 23%. So it's a marginal rate in the middle. So just be wary, but it's kind of like starts at 19%. Every company needs to submit a corporation tax return each year, which has to be 12 months. I will cover these profit extraction later in the video. And then if your sales are taxable supplies are more than 85,000, you need to be VAT registered. And it's good to consider early registration, so you don't do it after you've hit the 85,000. So you can plan ahead for the VAT as well. So this area is more about a limited company, because a lot of clients want to start with a limited company. So a limited company is separate from the owners, and the owners are the shareholders. So you can't say this is my company, but you are the shareholder technically, but it's a separate legal entity in its own. So the people running the business are usually the directors, and they are the employees as well. So shareholders and directors are usually the same in a small company, and they are referred to as participators, and the company is referred to as a closed company. Company pays corporation tax, like I mentioned before. For every 12 months, it needs to pay corporation tax. It needs to file accounts on company's house, which become a public record. And the company money belongs to the company. So you can't just say that that's my money. When I refer to it as this is my company, you're the shareholder. So as a shareholder, you can get a dividend. As a director, you can get a salary. So if the company money is not yours, so you need to either pay yourself a salary or a dividend to take money out. And then you pay income tax on the income or the returns that you've got from the company. So points to consider are that if you're a limited company, you're on the company's register, and so your suppliers, your customers can see, okay, that's more credible business, and they can see the profitability of the business as well. And when you start a limited company, everything needs to be in the company name. For example, loans, bank accounts, telephone, contracts, leases, everything should be in the company account. It can be trickier to get funding for a company because it's a new company, doesn't have any history on it, rather than a person getting a loan on their own self, but you can get it. So what are the pros of having a company? It's a limited liability, so that whatever the company owes, it has to pay, rather than the shareholders or the directors being personally liable. But you need to look at the contracts. There can be contracts which make the shareholders or the directors liable as well. So there's a legal continuity that you can sell it or you can transfer it. The borrowing tends to be much easier for a company because it's been trading if it's been going on for a while. And the same thing that I mentioned about credibility. Pension scheme is more about extraction of profit. So a company can pay into your pension scheme in your personal pension directly, and it will be a corporation tax deduction for the company, and you'll get it in your pension pot. then you can do staff incentives as well from a company. The core cons are administration, because you need to do the company accounts, you need to do confirmation statement, you need to do corporation tax return, and so these are like and the fact that you have to change all the contracts in the company's name is a higher administration. Less privacy, that people can see how much you're making in a way. I mean, they can find out if there's a corporation tax liability, they can work out the profits, and they can also see the related party disclosures as well as to how much the person is making as well. So those are the things. So once how you can pay yourself from a company as a direct, like I mentioned, as a director, you get a salary, and as a shareholder, you get dividends. Now, if our advice is that you take a salary up to the secondary threshold, but that there's a caveat that your only source of income is from a limited company. Okay, so if it's different, we need to discuss what's the best extraction of profits for you. But generally, it's about paying yourself a salary up to a secondary threshold and then declaring dividends. And the dividend and the taxation rates right now are 20%, 40%, 45%. And for first 12,570 is tax-free in the UK. Let's leave that. The dividends, like I mentioned, first. So the first 1,000 is tax-free, and the remaining are taxed at 8.75 and 33.75. And so that the dividends can only be paid if the company has reserves in it. That is, it's making a profit after tax. So what expenses are allowed? Anything which is wholly and exclusively for business purposes is allowed. You cannot just put all the expenses, all your receipts in the business and say that's deductible, or it has to be wholly and exclusively for business. If there's a personal benefit, for example, you use your mobile phone for business and personal, then you need to have a proportion of it as to how much time or usage is appropriate for the business use. If you pay from your personal bank account, for example, the business bank account wasn't set up in the first place, then you can reclaim those back. You can put those expenses, still put those expenses in the business and can be reimbursed by the company. Examples of expenses are rent and rates, equipment expense, insurance, bank charges, accounting, advertisement, anything which is for the business. Okay, for travel costs, travel is a little bit technical. So the travel from a permanent place of residence to a permanent place of business is not deductible. It has to be a temporary place of business that you go to. So normally a person coming from their home to a work or their permanent office is not deductible. So the key deadlines for a limited company is that once you open a company, you kind of have like 21 days to submit the accounts, which is basically first 12 months are your period of account, and then after you have 9 months to submit those accounts, it becomes 21. And then corporation tax is payable 9 months and 1 day after the company's year end. And confirmation statements is every 12 months. It's more about who are the directors and who are the shareholders in the company. If you have any more questions, just feel free to get in touch with us. Our email address is croydon-central@taxassist.co.uk. Alternatively, you can call us up on 020-3301-5868. Thank you very much.